morning, and everyone. Welcome to the Trading Success Blueprint, the Beginner's Online Trading webinar. My name is Danny, and I will give you the webinar today. The first part will be more into an introduction to the company, what services we have, what functions in this facility, which is called the Web Trader, can assist you along your journey. We'll also speak about some nice guide through in here, the toolbar, how we can utilize with it to help us trading. We'll also go through just briefly about the idea with the lot size, the leverage, the value, the margin impact, and the spread, and all kind of things here on the right side. The second part will be more practical. We'll actually design a position to see how we can compose a position with logic, with certain idea behind it, and not just randomly do things. And lastly, the third part, perhaps usually we keep it for the last, the analysis part, because the majority will happen on the second part. It will be basic essentials for you to learn how to trade. Okay. And it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, I understand that sometimes things are not understood on the spot, and you have to review later on and somehow get the recordings to just recap or maybe watch it again your own pace, and that's fine because this webinar is recorded. Okay, and it will be uploaded to YouTube later on for you to just review at any time. And not only this webinar, all the other webinars, as far as I'm concerned, will be uploaded to our YouTube channel later on. So as many of you know, AvaTrade, we are a regulated company. We have 9 licenses worldwide. We are here since 2006. Our customer service, in case you have a query or a question, can be found here at the bottom left of the screen, okay? Chat with us or the WhatsApp, whatever you prefer. Or send an email to customerservice@cs@avatrade.com. This facility is called a Web Trader, okay? So obviously, if you can't see the chat here, you can use the email to access the customer service. And if it doesn't look this way, this is called a Web Trader. Just jotting it down. We'll speak about it more comprehensively in a minute. But now, just to have the idea, the Web Trader, the platform that we're looking at, is not something that you have to install or download. Okay, which is a huge benefit because you can just use your browser and get to here, and then you can trade. If it doesn't look this way, you should contact your first customer service. We're going to speak about the account manager now, but you can either contact the customer service or your senior account manager. One of those two can assist you with applying this Web Trader on your account. It has many unique features, which I'm going to show you. All kind of things here. Like I said, we're going to go through that in a minute. But just to first be able to get to here, it's only with your logging with your email and password. Okay, now I wrote it down, the AvaGo, because this is the desktop version. You can also have it on the app. Okay, it's very similar. Obviously, if it's on your phone, it's going to look a bit different, but the functions are quite similar. Okay, so we spoke about customer service. I don't need to explain what they do. It's self-explanatory, but we can also provide with a senior account manager. It can be assigned on your file and assist you along your journey. Now, a senior account manager can be a key ingredient for somebody who is a beginner, from a simple reason that as a beginner, not always I know what to do and how to do, and sometimes I need a trading plan and trading, even in specific things like risk money management or analysis or anything like that, or just basic understanding of which asset to pick and how to do things, and a senior account manager can assist you with that. Of course, it can get down to deeper depths if necessary, but the idea is to be able to have somebody to contact and get assistance. Okay, if you've made a deposit and your senior account manager hasn't automatically contacted you, you can ask the customer service for him to call you or to assign somebody. Okay. Now let's proceed with the web trader, but I believe it might be more logic just to put the other platforms just to have the idea that we have it. Of course, you don't have to use it if you don't want to. We have the MT4 and MT5, which are this is what we have designed, which is modified to beginners and had many features. MT4 and MT5 is more straightforward. Okay, I would say very, very good to use as well. Okay, we also have Ava Options and Ava Social. Now, I'm not gonna talk about the upper three too much because they are less relevant for us at the moment. But Ava Social is something that I would like to mention, as this is a webinar for beginners. Of course, we're gonna learn things that are not beginners only, but okay. Now, how does Ava Social, how can it help me as a beginner? Well, the main two functions that Ava Social is offering is called either copy or follow. Okay, or follow and copy. Now, how does that work? The same idea, obviously it's going to look different, but the same idea, we have here a list of instruments. When you download Ava Social, you're going to enjoy traders that you can either follow or copy, okay, by clicking on a button. Of course, there's more to it, and this is why you have to download the app. But the idea is very, very simple. You can pick another trader, and then you can follow him. Of course, you want to see the results, if he's good or not, and make a decision. But let's suppose that you've made a decision, you've done your research, you want to follow someone. What will happen is you will get notifications with his positions, and then you can decide if you want to execute similarly or just to keep it in your research. Okay, you basically going to get notifications with your trader's position, and it's up to you to execute, or like I said, maybe just to learn from it. And the copy function is allowing you to execute that automatically. Therefore, if I'm copying someone, I'm also going to get notifications with his positions, but it will also execute them automatically without me doing anything, right? Practically linking my account to somebody else's account. And the beauty is that you can make the adjustments that you want in the app. The load size can be in difference, which is something that you might want to do if your balance is not compatible with a person that you're following. So for instance, if I'm with 10,000 and I'm following somebody that has 500,000, okay, and he's taking considerable positions which my account can't necessarily handle, so I can make the adjustment in the app. Unfortunately, I don't have a way to show it to you now, but if you download Ava Social, it's very easy to maneuver. It's really there, and it's free. So of course, I'd highly recommend you to try. And yeah, that's about Ava Social. Now let's carry on with the web trader. There are a couple of things that I would like to show you here today. But for that, okay, so first let's write it by its name. The product that I'm going to show you, just a second, guys. The product that I'm going to show you is called Ava Protect. And the way that this product works is, first I'm going to write down, okay, Forex Gold and Silver. The way that it works is that it allows you to protect your position, and if you lost something during that coverage, you're going to get it back. However, it's only with Forex Gold and Silver. So let's open either Forex Gold and Silver. Let's maybe go with just basic, one of the majors perhaps. Let's go with Euro USD. Okay. And let's have a look at, well, maybe I should put it down just a little more straightforward. Okay, so ever protect allows you to protect the position for a certain time frame. Okay, whatever you lost during the coverage, you will get back, and there is a fee when using the service. Okay. All right, but let's first understand what is this protection all about, because protect me from what? What exactly ever protect is protecting me from, guys? Anybody has any idea? It allows you to protect the position, okay, but what do I need protection from? Your losses. Okay, thank you, Kim. So it protects me from my losses. Does that mean that I'm not going to lose? No. The idea here is that I will have the loss and I will get it back. Okay, so for that, we're going to write down a simple scenario here. Okay, as an example, let's say we're going to have a buy. Let's place a take profit and stop loss to simulate the results. Okay. Right. Let's increase it by 100. All right. So the way, Kim, you are completely right. What it allows me to do, ever protect, it allows me to protect myself from the losses. So in case I lose, I get the money back. Don't worry, guys, about the pink lines here. It's really nothing to worry about. I'm going to show you all of that in the second segment. I just don't want to delay about. I don't want to delay about it now. Just showing you the product, and then we can carry on with ease. Okay, but to have the idea, I've marked the upper line with green and the bottom line with red. Okay, I've increased it by 100 pips, and now let's look at the at the product when the scenario is ready. Okay, so I'm gonna hit the box here. Okay, and it allows me to choose the time. So whatever referenced to the time that I can be covered is between what it's between 1 hour. Just a moment. Excuse me, guys. Okay, so it allows me to pick from 1 hour up to, and I want you to notice what happens with the fee. Okay, just look what happens with the fee. I'm with currently I'm with 1 hour, so it's 662. Let's increase 3 hours, it's 926. 6 hours, and so on and so on. And 2 days, 2463. So this is the coverage to its full extent for 2 days. It's also showing me here the expiry. And then I can see, okay, if it moves from where it's at right now, this is the difference, right? This is how many USDs I have to have 1 euro, right? So this is 1.0817, and this is the micro pip. Just to understand the idea here. So this is the value, right? And we are counting 1, 2, 3, 4, and this is the pip that we're looking at. When I am taking 0.1 and I increased it by 100, you see that the difference here became 100. And that means that in this scenario, very, very simple. Let's say profit, loss, fee. Okay. And then what I can do is simply type down here 100. Let's be precise about it, 105. Here the loss, potential loss. Let's add a P for potential. Okay, and the fee, what was the fee? 24.63. Oh, and one more thing that determine if the fee is going to increase or decrease is the lot size. So if I'm going to, as an example, take it from 0.1 to 0.5, it will become accordingly, it will increase accordingly. Okay. Right. So in this scenario, again, just to clarify, AVA Protect does not prevent me from losing. It reimburses me what I've lost, specifically on the time length that I've covered, not beyond that. In other words, if I've covered this position for 2 days, but I choose to carry on with it, and I have lost farther down, I've lost more after the coverage, I will not get it back. And I cannot extend the position that I have. I cannot extend the protection that I have. In other words, if for instance, I'm going to go for 1 day, right? And then I want to increase, right? I want to increase. Oh, something happened with the lot size. Yeah, so let's suppose I want to increase, right? So I'm not going to be able to do that when the coverage ends. Okay, we understand that? It's very, very simple. What I'm going to lose during that coverage, I'm going to get back. Afterwards, I'm not. And one more thing, it's not mandatory to use take profit and stop loss, but keep in mind the scenario, as I said. If, God forbid, I haven't used the stop loss, okay, and it carried on down, and in here my coverage ended, and I kept the position open, I might be in a very big problem. Okay? All right, so that's how it works in this scenario. Very simple. We can make 100, we can lose 110. Okay, and the fee here, we're going to pay it anyway. It's important to understand that this is why I've wrote it down here. There is a fee when I'm using the service, regardless if I've made profits or loss. Okay, very, very simple. Are we understanding this, guys? Do we have any questions regarding this bit? All right. Is there a limit? No, there is no limit, Anna. So Anna, you're asking if there is a limit to use AVA Protect. There is no limit. As long as you can, of course, pay the fee and you have enough margin to execute the positions, you can, yeah, you can use it freely. All right. So with this, there is actually 2 more things that I would like to show you, because you may be able to protect your position, but you still want to be able to also analyze the market, and therefore I'm going to show you now a couple of things here to the left. Okay, there are a lot of content that here you can enjoy, tutorials, academy, all kind of things, guardian angel that can assist you, other platforms, maybe it's less relevant for us now. And the discovery, what I wanted to show you, first of all, this, we also have signals. Fortunately, we don't have time to really go through that, just to have the idea how simple that is. So you have signals here, right? Signal section. You can pick something. Let's go with a Dogecoin. Okay, you can pick something, and then you already have the support and resistance interpreted, and you have the pivot, and you have the buy scenario and the sell scenario. So let's suppose you're going to look at that, and you're going to say, let's quickly match the validity. And you say, okay, that seems to me like potentially a good buy. So you click here on buy, and it's already placed for you here. Unfortunately, I think that this signal is already futile. So we're going to pick something else. Let's say gold as an example. You have to make sure that the signal you're taking, the scenario is still valid. Okay, so let's suppose we're looking at gold. Okay, let's go with gold. And you say, okay, that seems to me like a good, let's say, just matching the validity here. Okay, let's get a bit smaller. 1 day, 1 day. Okay. And you think that this is, actually, let's say that this is a sell scenario. Okay. And when I'm hitting this sell, I see I already have the take profit and the stop loss. But I almost forgot to explain to you what the take profit and the stop loss are, because this is, after all, a beginner's webinar, right? So just by the way, the take profit and the stop loss are among 3 pending orders which can assist you. The take profit closes the position with the profit reaching the price. You don't have to remember anything that I say because it's already here. Yeah, I'm pointing on it and it explains me. Preset stop loss order to minimize losses when the market is moving against you. So this stops my position with a loss. This stops my position with the profit. And this one execute the position when price hits. So those are 3 pending orders. This allows me to execute the position automatically. This is closing it automatically with a profit. This is closing it with a loss. This is super, super simple, however, super effective, okay? Learning how to trade with pending orders can be a huge time saver. And the main reason is it's automatic. It's automatic. I don't have to spend a minute once everything is set. So I highly recommend you to get more familiar with that. For the beginners in the audience, let's say. Okay. Next one, the news section. Also very nice. You can filter it by different criteria: indices, commodities, forex stocks, and cryptos. Okay, the nice thing about the section here is that you can see by related instruments. If I'm going to click it, that's going to show me what it's related to. So the pre-Asia market brief, if I'll go through that, I might be able to analyze not 1 asset, but 4. Okay, 4 instruments. Okay. Further down, we have discovery. This will have me. This will give me a nice idea of what is popular these days. Let's just give it a moment. Okay, and we are looking at, well, 4 blue chips. Tesla, Nvidia recently splitted. Microsoft and Apple. Okay. What else is interesting here? Anyway, you get the idea. I don't want to delay about it too much. So let's carry on. We also have here the economic calendar. Again, same idea. You can also filter it by different criteria. You can choose what's important for you. Maybe the high, maybe I'm more focused on the medium. I don't like the extreme volatility as an example. Clicking here on the arrows, fall down to the countries. I can go with maybe China or maybe Greece or something else that I like, maybe the yen. Okay, and then it's going to show me why it's not showing me any event, because it's marked on today. And it appears that today Japanese yen doesn't have any specific news on our calendar, but I can click and choose up to a certain date. So from the 10th until the 31st, there are events. There is an event next week and 2 weeks. And yeah, you can, again, the same idea as I said before, you can play with it and see how it goes. It's constructed very nicely. You can see the previous result, forecast, the actual, and the importance, which we filtered by. And to me, the most important thing of all, and the most, I think, useful function in this calendar is to be able to add it to your own calendar. And then what I can do, if I don't want to shoot all directions, I want to specify on a specific asset, and I want to read the fundamentals and get more familiar with it. But at the same time, I don't have the time to look for the events and to wait for the events and to just keep being around it, I can basically add it to my calendar. And then I don't have to waste a minute and just getting a pop-up message on my phone, and I can directly visit the occurrence. I can just specify my time. All right, so this is very good. Let's carry on. I can also look for a particular event. There are all kind of nice things here. See the chart. Okay. All right, I think we concluded the first part quite successfully, and we can finally, do we have any questions though? Anybody has anything to ask that you would like me to go through, anything that I said that wasn't fully understood? Is there anything like that? Okay, so let's begin with the second part. And let's find ourselves. Okay, there is a question from Mary. Will we now learn how to trade? Yeah, let's try that. Yeah. Let's try to learn how to trade. Okay, so let's scroll down. We have nice categories here. Okay, the same as the news section. Let's go with commodities, or maybe let's go with indices. Of course, if you already know which asset you want, you can just look for it. So for instance, if I wanted Nasdaq, well, it's US Tech 100, but I could just search it from here. Okay, I didn't have to go through the lists there. So let's click it from the list. Trifon, you're asking, will you show some profitable strategies? This is the same question as Mary. Mary asked if we will now learn how to trade. Yeah, well, I hope so. But the strategies, I'm not sure if I'll have time for that. Trifon. Okay, let's get moving and see how fast we are, and perhaps I can throw in a good strategy. But let's see how time will go by. Okay, so we have picked Nasdaq. We're gonna go with buy. Don't worry, I'm not doing anything. I'm just preparing things up. But I think Nasdaq is a little difficult to show you the analysis tips on it. Let's maybe get one of the metals or the agriculture. Okay. How is oil looking at? Oil, okay. All right. So, yeah, that's not bad. That's not bad. So, the way that we are going to do this, first, let's have a guide through about the facility here, and then we're going to do some preparations. And once we are done, we can carry on with ease. Where is our dear notepad? Oh, there we go. Okay, then. Let's also get rid of everything here so it won't be in our way. Crude oil. Okay. And then let's also think about how we are going to do this. First, let's have a guide through, and then we'll think how we are going to do this. All right. So you already saw from the signal section and before that I've clicked in here and I scroll down to see the time frames. So this is 1 minute. We have the minutes section, hours, days, weeks, and months. Let's switch to days. Okay. And I can validate this when I enable the crosshair. Okay, because now if I'm going to tell you that each candle here is a day, maybe you're not going to believe me, right? There is no information whatsoever with the crosshair being like that. So we have to click here on the crosshair and change it from no crosshair to crosshair. as the basic thing to do, and now I can get information from the candles and I can validate that this is indeed Wednesday, Tuesday, Monday, right? We're looking at in here, yeah? You can see that the numbers keep on changing. So this is the 17th, 18th, 19th, 20th, 21st, and so on. Weeks will be 7 days difference, right? Yeah, you can play with it. If you don't have a wheel on your mouse, you can click in here on the toggle and scroll down. This is for laptop users, okay? In here, we can change it to bars, we can change it to a line, okay? And we can keep it as candlesticks, Japanese candlesticks. Okay, and here I can split the layout, having two at the same time, perhaps. I can also put it next to each other. Okay. We also have here the indicators, which soon we are going to apply. And in here on the tiny arrow, I have placed all the nice things to help me capture the analysis in a bit more visible way, right? Okay, just a second, guys. Okay, to move the lines, I can move the lines with two ways. One, I can click it and change its coordinates. So if it gets funky with me when I'm trying to land it on an exact price, I could just change it in the coordinates and it will jump to the price. Same apply with this guy. Okay. This one, let's make it 83.5. And that one, 85.5. Okay. Now, how do I know what to trade? Now we're looking at oil. So how would I know what position to take now? What is this lot means? How to place the take profit, the stop loss? Should I even buy or sell? Okay, how will I know all those things? Spread, what is spread? What is leverage? Okay. So the most basic thing to begin with is if I'm going to take a buy, it goes higher, I make profit. This is something any beginner should know. If it goes up, you make a profit. Goes down, you have a loss. If this would have been a sell scenario, it would be the other way around. So when I'm selling something, I want the value to decrease. If the value increases, I'm having a loss. So with this in mind, we understand that if I'm going to click here buy and it goes up, I'm going to make a profit. That's amazing. But how much profit? Furthermore, if I'm going to take a buy and it goes to, let's say, let's take that guy, to 81.85 and it turns around. This is my profit ratio, right? So if I took a buy and it goes up a little and then it goes down, for me to take a profit, I have to close the position while it's still in the profit area. Yeah? Again, this is very basic, but it will help us construct the position with much more sense and know where we are heading to. Okay. In other words, during that time that it was here, during those prices, I need to know that the numbers that I want to make can actually happen. So for instance, if it gets to 81, 84, let's place here 81, 84, 81, 84 with a dot in the middle. Okay, and I will be with the bare minimum lot size. I will make $4. Okay, not bad. $4 is not bad. But it's not a number that I like, right? $4 is not something worth for me to open the position. Okay, my personal expectations. An amount that I would prefer would be perhaps 100, 500, or 1,000. Okay, so how would I know what is the lot size necessary to make this? Okay, let's say $1,000. And also, how would I know which price I'm supposed to get to? Will this suffice to get $1,000? No, it doesn't seem so. It seems like it's enough for $4. So I can increase the lot size. Let's try and make it one lot. Okay, let's place it again, 81, 85. No, this is not enough. Okay, so I can keep increasing the lot size, but that's not going to be wise because we'll talk about it later, but I might get caught with not enough margin, and then I won't be able to execute the position. Okay, so let's go back. Let's go back. And now we've understood something very important. A, there is a certain length that from the entry, crude oil needs to get to for me to make my amount. And the second thing is I can also adjust the lot size so it will match. Now, let's suppose that this is a number that I like and this is a number that I like, and I think that oil will get to here or maybe here, okay, with the buy, because in here we've understood it might be too little. Okay, so how can I validate that it will get to here or to here? Okay, there must be a way for me to estimate how much oil can move, and then I can know the proportions to whether to buy or to sell, right? If I don't know how much it moves, it doesn't matter if I take buy or sell because it can always turn around. Let me just show you how frequent oil turns around, right? Yeah, so all these candlesticks, you see, this is bearish. That means that the market goes down, bullish goes up, right? So look, it went down consistently for the past few hours, okay? But recently, in the past 4 hours, let me just switch to 4 hours, it's changed, yeah? So the direction is futile unless I will specify a certain line. Okay, I can just say it goes up. Okay, it will go up 10 cents and it will go down $5. All right. So let's write down a few things that will help us construct the position with a bit more sense. We have the target, time, movements in units. Okay, and the first thing that I said was the target. The reason is, even if I'll open the position and I make profits and I've done the analysis and everything, and okay, but at the end of the day, I'm making $5 from what I see here on the platform. It's not really worth my time, right? Again, I would happy to see here 500 or 1,000, but let's get to that. So, oops, let's get to that. So, in the target, what I'm going to do is I'm simply going to put here 1,000. Okay. Also, the time is something that I have to decide because of few flavors. The primary flavor is, as we have explained, this is money and I have invested money and I need to know that the profit that I'm making is actually justifying my time trading. And if it will take me, let's say, 1 year to make $1,000, maybe it's a little less than $85 a month. So I'm not sure I'm going to be happy with that. If I'll make it in a month, maybe it's enough for groceries, right? If I make it in a week, not bad. Not bad, and I can also know what candles to analyze This is why I can switch to weeks and analyze it with weeks. Okay, but we'll do that in a moment. Until then, let's also think about how we can estimate how much crude oil can move so we can get to the numbers. Right, so one way to do it is, of course, to do manual checking. And manual check will be to look at yesterday and say, yesterday, crude oil opened with, how do I get the numbers though? The only thing I do is I just point on the chart. Let me show you. See candles all over the chart. I just point on the candle and it's showing me here at the left upper corner this blue rectangle with the numbers. Okay, so I'm just writing it down. That's all. Writing it down. Let's do open. It will be 82.22. Close is 81.68. High is 82.46 and low. Okay, this is a very primitive. Just a second way to do things. This is a very primitive way. We're going to apply an indicator, but I just wanted you guys to see that. Okay, so you will also be able to confirm in case your indicators doesn't make sense or any other reason. So what I'm going to do, those are two different groups. One is showing us the whole length of the candle from bottom to top, and that's low to high. And the other is showing us from open to close, which is the colored area, which is the body of the candle. Okay, now if I will subtract the open from the close, I will see that this is $0.50 movement between the open and the close. This is the results. Again, this is not the actual fluctuations. This is just the results. And this is the whole length. Okay, but the problem with that, if for instance I would accumulate and I would accumulate both figures, and I would say, listen, I think that on average it can move, let's say, almost $1, and I'm gonna locate my take profit almost $1 away. And okay, but the problem with that, there are two issues. A, this is a daily candle and our goal is weekly. Yeah, so would have to change to weekly, and we would have to do the same thing with the weekly candle, and it would make more sense. But even so, you can see that each candle here is different in its size, which means that the averages are not going to be the same. So in order to take a particular candle, let's suppose we're going to take last week, to have a precise average number, I'm going to have to take more intervals to accumulate. I can't rely on one interval to give me an average. I have to take perhaps this one, that one, this one. Okay, but to do this exercise to subtract the numbers and all of that, that takes a lot of time. Okay, even if I'm fast and I'm used to the method, okay, so to write down the numbers and everything could take me a good maybe 5 or 10 minutes. Okay, so we can apply an indicator that will do exactly that. Let's click here on the FX indicator. We're going to look for AVE for average true range. We're going to click and drag it to the right. Let's also change the color to mustard. This determines the length of how many candles I wanted to go back. I don't think that 14 weeks is quite appropriate. It's more than 3 months away. We don't want to do that. Let's go with half. A month and 3 weeks makes more sense somehow, right? 1, 2, 3, 4, 5, 6, 7. That's before this segment have changed. Okay. All right. Now, with this in mind, you see that the 3.5 is actually the average for oil per week. So I'm going to put here ATR equals 356. Okay. And now I'm also going to potential average movement. I'm going to change that number, okay, because the ATR is average to rule range. Average to rule range. This is the range of what it can move. But for me, my potential average movement can be different. I don't have to take the 3.5630 as a guaranteed number. I can say that my potential average movement will be maybe 3 or maybe less than the ATR. I'm not obligated to rely on the 3.5. Of course, I can even go more than that. Okay, this is just as an idea, to have an idea of what we are expecting. Okay, so my PAM can be, instead of 3.5630, just 3.5. And now, with this in mind, let's look at the numbers and see how many units we need to make $1,000 with crude oil, having 3.5, the difference between the entry to the goal price. Again, between the entry to the goal price. This is our movement, and our movement also called price difference, right? And the units also called quantities or lot size, lot maybe amount, okay? All right. In this case, let's write down an equation. Target divided by movements equals units. Therefore, 1,000 divided by 3.5 is how much? Let's see together. Okay, 285. Okay, 285, no problem. Great. Let's put it to the test, see what the platform thinks. Okay, let's first, because this is a buy scenario, and in a buy scenario, our intention is that the value will increase. You remember, taking on buy means that we want the value to increase. Okay, that means that we can add on top of the current price 3.5, therefore 8143 plus 3.5. Okay, and we can round it out to 85, so we won't be confused. Let's go with 85, put it down a bit. Okay, now let's put here 85. Very good. And now let's put here in the amount lot our units, 285. But the problem is that the increments here are only with 10. Therefore, we'll have to minimize this. We'll either have to round it up or down, right? So let's round it down to match with our numbers. Okay, so 280. And let's also take the same length and subtract 81 minus, okay, so that's, something happened with our line. Bring it back, bring it back. Okay, let's also simulate the stop loss as the same length the other way around. Means 84.5 minus 3.5, 78. Okay, 78. Let's put this down a little lower. Okay. Simulating, taking in. Okay, very nice. So in this case, something here. All right. Oh, sorry. Because oil went down a little, it jams our calculation, but we still understand that it's very close to the original number. So this is why. Yeah, keep in mind that when you're using this technique, your numbers sometimes are not going to be perfect, and that's fine because the market is moving. Oh, sorry, should have kept it this way. Okay, because the market is moving, so even if it's not exactly 1,000, that's fine. And you can secure it to be exact by clicking here on the execute when price hits and simply marking it a specific number, right? This is minus the spread. Okay, so in this case, we're looking at making 1,000 or potentially losing 1,000. This has been adjusted to 280. Okay, and now we have everything very, very nicely. Take profit and stop loss. Take profit is 85. Stop loss is 78. Okay. Potential profit. Of course, you don't have to put it the same way as I do, guys. Because I know that this process takes time, but it allows you to know where you're standing. Okay, so now we are looking at either making 1,000 or losing potentially 930. Okay, that stands for 10% of my account. 930 stands for 9.3% of my account. Okay, so potential loss divided by balance equals X, and X times 100 equals exposure. What does that mean exactly? Just hold on, Danny. You wrote down some things you should explain. And of course, I will explain. When we are looking at the stop loss, we would like to compare it with our balance, because if I'm looking at the profit, it looks fine, 10% out of 10,000, of course, per week is not bad at all, considering this might not be the only position that I take, and then it looks very nicely. Never, again, ignore the ratio here, okay? Some people will say, oh, how can you? Okay, but the ratio here is not relevant. Okay, we can adjust it, and I'm going to show you now. If I'm looking at 930 and I'm thinking that 930 might be a little exaggerated and I would like to adjust it, okay, but beforehand I want to know how much in percentages it's out of my balance. Okay, so what I can do, is I can go 930 divided by 10,000, right? And then I multiply that by 100, yeah, as it's written here. And then I know that this is 9.3% of my balance, yeah? Now, let's suppose that I like to keep things around the 2.5, 3%, give or take. Okay, so our exposure now. Okay, so what do we have to do to minimize it to 3? There are 2 things that I can do. One, change the, who knows, guys? How do I modify my exposure from 9.3 to 3? Change the lot size. Thank you, Mary. Who knows the other one? Change the, no, take profit. I'm sorry, Samuel, take profit is not something to, I mean, I can, but it's not going to contribute anything to adjust the loads, the stop loss. Correct, exactly. Tree font, very good. Change the stop loss, correct. So for one thing that I can do, I can just simply go 0.1 and then I'm at 3%. But the problem is that if I'm going to do that, look what happened with my potential profit, right? So we ain't going to do that. What we're going to do is, just second. What we're going to do is we are simply going to, something here doesn't make sense. Let's go 85. Okay. What I can do is I can get the stop loss closer. Okay. And by doing that, if I'm going to go to, how many do we have? 280. Right. So if I'm going to minimize this to only $1 difference, so of course, I will be at a lower loss. And then I have a ratio of 1 to 3. Yeah. This is just as simple as it gets, guys. I'm being honest with you. If you work in this way, and again, I understand that people don't necessarily like to jot down things like that, and it takes time and everything. But I think at least in the beginner, what you want to have is a clear idea of where you're heading to, and this is the main reason why I'm teaching this. I wish I had more time to speak about the leverage and what is in here, but unfortunately we don't have any more time. If anybody has any quick question before we say goodbye, you are more than welcome to jot it down. In the meantime, I'm just gonna remind you guys that this webinar is recorded. So even if there are parts you didn't fully understand, you can just kindly go to our YouTube channel. You're gonna find everything there, including the previous webinars and including other webinars by Mr. Simon Friedman and Mr. Troy Frey, which you can enjoy. And that's it, guys. I wish you best of luck with your trading. I hope this webinar was helpful, and I wish you all a very good day.